Morning, everyone. I'm Audrey Boissneau. This is Mortgage Pros 411. I have my co-host Kevin Casey with me, and today we are joined by Joe Weber. Hi, Joe.
Good morning.
How are you?
Pretty well this morning.
You trying to contain your excitement, Joe?
I'll do my best.
Bring it down a little bit, okay?
So we asked Joe how it was going today, and the response was another day of turmoil and chaos in the insurance business. I almost fell off my chair laughing. So
Yeah.
here we are, always never a dull moment, right?
Yeah, no, welcome to the mortgage world.
Exactly. It's always like this. We're up, we're down, we're good, we're bad.
Hey, Audrey, I hear, just speaking of the mortgage world, there's a particular senator that's proposing that the Fed needs to cut their rates by 0.75%.
Oh my gosh. So the Democrats and the Republicans have now aligned and think that they should dictate monetary policy. Yeah. So we have a senator screaming from the rooftops that we have to the Fed that we should have a 75 basis point change or cut. Thank you. And by the way, I'm not saying whether we should or should not. I'm just saying that the senators need to stay in their own damn lane and not try and presidents and everyone should do their jobs that they're supposedly good at and qualified for and leave the rest for, the experts.
Well, the best quote I heard on this was, I won't name the president, but the president said that he was smarter than all the Army generals in the military. And the response was, you might be smarter than us, but you don't have the bandwidth to do our jobs. So can you just let us do our jobs?
Well, it's funny because that reminds me of something I heard this morning where there's this big, obviously we need people who are younger in the business. Like we're not going to live forever. It is not just, us and no one else. But the idea that there is an age that's attached with whether you're good, bad, and efficient or not, and that, like you lose something without all that experience, right? So you want people to get into the business and to have experience and get experience, but that doesn't mean that you throw everyone else out. And this idea that we can be replaced by technology, et cetera. No, I mean, there's so much that is to be said for the experience levels of people who have done this for a while. Okay, so we went off way faster than I thought to into the weeds. But I just wanted to mention quickly that we are putting together live NMLS classes. So just hang in there, kids. We're working on it and should have something nailed down shortly. We're getting closer and closer with every passing day. And
but a little note, if you're in the Bay Area, save Monday the 23rd as a date for an NMLS class.
Oh, that one is set. Okay, so that's September 23rd, right?
It's the date is on the calendar, the room is set. Now we just have to finalize the fun stuff behind the scenes.
Okay, yeah. Well, that's yeah. I'll just leave it at that. With all that being said, we are also part of Chrisman Media Group, where you have a lineup of different videos and podcasts throughout the week, depending on what your interests are. So check out the Chrisman commentary. There's a website.
RobChrisman.com, right?
Pardon me?
RobChrisman.com?
No, they have a new website. Gosh darn it, I wrote it down. Where the heck is it? Oh, ChrismanCommentary.com. Hello. Anyway, so yes, so I
wouldn't be able to sign up for that one.
With that being said, Thursday we have pending home sales, jobless claims, and second look at GDP, second look at must have been second quarter GDP. And Friday we have PCE. What is PCE? Personal consumption expenditure. That is the Fed's favorite measure of inflation. And one of the big signals we're going to have before the Fed meeting on September 18th that tells us what kind of cut we're going to receive. We know that we're 100% going to get 25 basis points. There was a few days ago, it was a 33% chance that we might get a 50 basis point cut. In the last 3 rate cut cycles, don't ask me to say that really fast. There's been a 50 basis point cut to set off that cycle. Okay. I don't know why that was so hard to
not the 3/4.
I had to slow way down.
So what are the odds on the 3/4?
Let's see. I saw one senator screaming it from the rooftops. I haven't seen any other baked in Fed futures numbers on that, but we'll see. I mean, you never know what they might do. And again, we still have a jobs report, which I'm sure will be complete BS for the BLS again. And before that, and we have PCE. So we have a long way to go before we're able to figure that out. And speaking of BS, let's talk about those job revisions that we received last week. So I've been railing on this to the point where I really thought that this had happened before last week's show, and I'd already had my go on here about it, but no. So we know that the BLS, Bureau of Labor Statistics, comes out with their jobs report every month, right?
Right. And then after the next month, they review or change their prediction from the previous months.
Right. So they come out with their numbers and like, okay, here are numbers for today. And by the way, last month and probably the month before, we were wrong. And let us tell you what those look like. And they have these massive revisions sometimes. And so, or oftentimes is probably a better characterization. So that's what happens, right? And then every once in a while, somebody really tallies up all the real numbers and hits us with some more. Guess what that was?
800,000 jobs.
Not 800,000, Kevin, 818,000 jobs that never, ever happened. Okay, so I just want to make sure I'm driving home this point so that we are really understanding that that is in addition to the revisions that they tell us every month. In addition. So, I mean,
in other words, for the millions of jobs that were created, there were really none.
Yes, that would basically be it. So we all have suffered for many on various, parts of our lives through the fact that these job reports were so flawed. So the Fed kept saying, hey, unemployment, that's great. We're doing great. Jobs are good. Hey, we got to focus on inflation, which we did need to focus on inflation. But the inflation numbers were way in check a while ago and heading in the right direction, which is what we wanted. And meanwhile, they were going off of flawed information and making decisions that have impacted so many parts of our lives. And I'm irritated.
Well, we'll make you Fed chair, and that'll solve everything.
I'm breathing. Okay. I don't think I'd be a good Fed chair. My mouth, I can't keep it all inside. I cannot fake it. I can't be measured. Although, can I just tell you? So at the Jackson Hole meeting that just occurred last week, and Jerome Powell, he made his remarks, and they were very dovish, saying, yes, it's time for a cut for sure. We know it's time for a cut. He mentioned, oh, good Lord, where is it? He was very, he's very focused on that. 27 times he mentioned that, okay, I've lost my damn mind. All right, I'm going to go off into a different direction because my brain.
He mentioned our show 27 times, Audrey?
Hang on. There it is. Concerned about the labor market. Geez, Louise. Concerned about the labor market 27 times. And I just want to say thank you to MBS Highway because they are the ones who counted it. I listened to the comments that he made. They were less than 16 minutes. And in 16 minutes, less than 16 minutes, 27 times he mentions, there it is, concerned about labor market. The time has come for cuts. So again, they know. And it also sounds like there were a bunch of them who were ready to cut at the last meeting. And somehow they all got on board with the idea of, we'll wait one more. Okay, I'm going to stop now. Joe, let's talk about something else. I need a break. Let's do something really cheerful like insurance.
Yes.
Insurance sounds a lot like what the feds are doing with interest rates.
And cybersecurity insurance and, it's some really pleasant topics, right? And by the way, can I just ask you, because a lot of times people think, okay, insurance is just impacting people on the coast or where there's water or whatever. I got a FEMA disaster area update for Vermont today. What in the world is going on in Vermont? So if you live in some part of the country and you're like, oh, it's just those people who are the problem, we're fine. Apparently not.
What's going on in Vermont?
The FEMA has been going through the remapping process probably the last 14, 15 years. So different regional areas of the country are suspect to their effort to remap, ultimately to draw a lot more property into that 100-year flood zone areas to alleviate the risk. And that is then it becomes a requirement to have flood insurance when you fall into that category.
Yep.
So it's,
Yeah, I've fallen in and out of that map.
yeah.
Yeah.
And then,
And so
your ticket out is to have an engineer come out and do a site engineering
yeah.
to determine the elevations and such. And if you're within that margin, you could see a relief of 50% of your cost if the measurement's correct. But it's a wild card. It's a wild play.
I don't even know if Vermont was flood. I don't know if it was flood. I don't know if it was fires. I don't know if there was some wild
Maple
hailstorm in
syrup.
August. I don't know what it was.
Maple
I'm
syrup
sure they
flooding.
have streams and tributaries that run through the state that can be, causing flood as a loss. So
Right. Well, it could be many things. Okay. So I want to start with why is this important to us? Why? Okay. Specifically, cybersecurity insurance. Let's start there. Why is that important to an LO or someone who owns a broker shop, et cetera? Because we had your friend Shauna Fippen on a couple weeks ago, and she was really interesting. So she is the cybersecurity expert who they go in, they do the analysis, they help you protect yourself, they help you try to do cleanup once you've had some sort of cybersecurity incident. But we didn't get into cybersecurity insurance and how that is impacting or is important, why it's important. So let's start there. Why is it important to us, Joe?
for today, it's about protecting the businesses that you have grown, right?
Mm-hmm.
And there's a lot of detail, and I could get into really in depth on that statement. But I'm going to take this a year and a half down the road and talk about compliance because regulatory changes are coming. The state of California is leading that effort, but you have a series of Fed generated requirements that businesses are going to have to uphold to. And if you choose not to, and then you're the victim of a ransomware or a cyber incident, then you're suspect to paying tens of thousands, if not hundreds of thousands of dollars of fines for being non-compliant. So it's, what came first, the chicken or the egg? Cyber has been out there for a long time, and for many attending on their commercial policies, they had a sublimit of cyber within their insurance contract under their general liability or under their professional liability and errors and omissions, for example. But the element of the cyber under that insuring agreement has diminished substantially because since 2018, the insurance industry was paying out a hell of a lot more in losses versus premiums collected. Very similar to, the discussion we had several weeks ago on property insurance in California, where, losses have mounted. And, we're dealing with that now. As it relates to the cyber element, because of these sublimits being whacked significantly, you cannot count that is going to be adequate coverage to protect yourself going forward.
Okay, so just to summarize, you used to be covered under your general liability. Now you may not be, or probably are not, and you need some extra policy. Would that be a fair characterization?
Yeah, you need additional protection. You need to know that in the event of a ransomware or a cyber attack, that if your systems have been hardened and they need to be replaced, and I'm talking about your PCs and your hardware and such, those are expenses that businesses will have to absorb. Insurance is there to protect that. It's called bricking. But unbeknownst to that is you also have this reputation, this issue of reputation. How does one, and again, with those that are attending, you've built so much time to build your businesses. You have such great reputations in your marketplaces. One incident could ruin you for life. So, and that's from an expense standpoint and from a PR standpoint.
So you're seeing this in all sorts of industries, right? Not just in mortgage.
Oh,
So
okay. Yeah.
we were talking about a photographer who had their systems hacked and photographs were spread all over the web. And people had photos that they did not want other people to see all over the place. And so you're liable for that, right? And
Mhm.
we've had regulators tell us that if you are the subject of a ransomware attack or some sort of cybersecurity incident, that they're going to scrutinize you more closely. So let's talk about this idea that you need to have cybersecurity insurance. This is not, kids, an advertisement for insurance. It's not. It is literally a conversation of what you need to do in your business right now to protect yourselves and your borrowers. That's it. That's all this is. So it is. So Joe, let's talk about. There are different parts of this, right? So some of us might be just like an LO who is working for somebody else. Someone else might be the owner of a broker shop, and maybe they got one or two LOs and they operated on a fairly tight budget, and they think, oh, this couldn't happen to me. And then you've got, so obviously then you have the bigger, it's, organizations, and one would hope they have their cybersecurity act together. That they don't always, because we see it all the time where people are hacked, they're shut down, all of a sudden they're in trouble. We've seen it with servicers, and those servicers, I mean, we've heard some of them, they did have processes in place, yet they still were hacked. And then we always have to be thinking ultimately about our clients, not just our obligation to them to protect their insurance, but also what can we share with them in their businesses so that they're thinking about this too, because maybe they aren't showing up weekly for some update and what's going on in their industry. Maybe they aren't aware of all this. So what can you do as a value add to your borrowers to help them understand what they should be doing? So that was a big list. Let's start with LOs. So if you're an LO, what do you do, Joe?
Well, and this is going to be a general answer for all those categories that you just touched on.
Okay.
And that is when you are obtaining, securing, holding very important information, private information, social security numbers, dates of births, addresses, and such. So when you're sharing and you're holding that information, you become culpable to an incident because it touched your system.
Right.
So if you're a smaller shop and you're sharing files from another provider or a lead source, for example, you could see yourself tied into having to have the protection of a cyber policy, whether or not it was an intentional act or not. And typically it's not an intentional act, but because you're tied to it, that exposes you to that potential fine, for example.
Right.
Mm-hmm.
You know, the PCI requirements in California,
PCI, Joe.
What's BI? Yeah, PTI. What's that?
that's the personal storing or the information on a personal level that the state, regulates under that requirement. But then you also have uh, payment card payment card industry. Again,
Oh,
sometimes you're collecting a form of payment to move a loan process along, whether it's an ACH authorization or
Okay,
such.
guys, let me just stop you right there, Joe. If you are a loan officer, for God's sake, don't be collecting your client's payment information, period. Have
okay.
a portal that it feeds into directly to a credit bureau, directly to an appraiser. Do not get in the middle of it. We used to. Oh my God, I very vividly remember, taking
Yeah.
down.
Writing down the credit card number. Yep.
I
Back
think
in the
back,
day.
I'm like, oh God, what the hell were we thinking? But yeah, we did it every
I
day.
used to have this whole elaborate system where I'd have, okay, the first half of the number is over on this page, the second half of the number is over here, the PIN number is here, and the whatever number is here, and a date they were there. And so that if anyone looked at it, they never know what all these numbers were.
Yeah, I'd like to tell you I did something similar, but I didn't. It was just I wrote down the number because I have OCD, so it all has to be very neat and tidy. So it was all right there. So all of that, it's way over. I haven't done that in so many years. I don't remember the last time. So just do not take payment information, period. Okay, that's it. Okay.
Okay.
Oh, Joe.
So on a larger scale, you have the Graham Leach Bliley Act,
Mm-hmm.
which is really going to be the teeth of how the feds are going to implement these conditions of engaging in business is going to be that one act. If you're handling any or collecting or handling any information, personal or financial, it ties you to that act. So again, we go back to the initial question. Why is cyber so important?
Mhm.
Well, it's so important because an incident occurring when it comes to that financial data, if it's a loss to your businesses, it's not going to get picked up primarily under your general liability insurance. It is specific to cyber ransomware insurance. That is in and of itself why it's so important.
Okay. So I would just say if you're working for somebody else, go to them and ask what safeguards are in place. Don't ignore the suggestions or the rules around protecting identity, protecting your own computer, all that stuff. So, but if you are like, let's say you are the owner, Joe, and you need to really look at the security in your own business and your shop. I mean, do you suggest consulting with someone like Shauna's company? Is it something you can do on your own? What does someone do in this situation?
Well, it's a great question because many of these businesses think that they can do it on their own, that they can get the Azure system from Microsoft, and that is a good firewall system. Or they might, purchase a CrowdStrike program to insert into their system.
Yeah, hang on. Let's stop for a minute there, Joe. What was that global shutdown that happened a few weeks ago, a month ago, whenever that was recently?
Delta Airlines is really hurt.
Yeah, that all began, from my understanding, from a patch that CrowdStrike was implementing. A patch meaning there was a weakness within their system. So they were doing the patch work, and for whatever reason, they did not complete a thorough testing of the patch. And we had a complete breakdown,
Yeah,
which
globally.
took down Delta and other major industries.
Right. And
Um,
they didn't even get hacked. They just were shut down because of a patch by their security provider.
Yeah, yeah.
Yeah.
And even in my insurance world, I had a number of insurance providers that were um, down for a 48-hour period of time. And they may have done that to protect their own systems, but nonetheless, it was an impact. And it began very innocuous. CrowdStrike, leading provider of what they've done, and they've built quite a strong reputation, which has now been, tarnished.
First, yeah.
Yeah, yeah.
So let's go back to reputation because that's a big deal. And the number one thing our clients want to know is, can I trust you? And it's not, it used to be, can I trust you to, look at my rate and tell me the right thing about my situation and what I qualify for. And now it is including, can I trust you with my personal information? And and so when somebody is a subject to this, and you have to disclose to your borrowers, you have to let them know, hey, this happened and this is what we're going to do for you, etc. I mean, it is really remarkable that we really need to focus on this now, but we really need to focus on this now. So let's talk about how often this happens. I believe Shauna was saying every 7 to 11 seconds or something like that. Some
Yeah.
crazy
It's
amount.
that frequent. It's that heavy of pressure consistently. Yeah.
Yes.
And the amounts are crazy. We're in the trillions of dollars of
Well, just the attempted hack alone can be disruptive.
Yep.
But yeah, this is all one of these things that I hope that more and more people are paying a closer attention to it, because you don't want to be suspect to having significant fines. You don't want to be shut down because you were non-compliant. You certainly don't want to be shut down because of an incident taking place, and you're wondering, well, how do I respond? How do I respond to in the media? How do I respond to my clients and my customers? That is, again, there's a line item in a cyber policy specific for reputation remediation. And
Wow.
that's a very, very important part of the overall aspect of the insurance policy.
Oh, that's interesting. Okay. So again, so somebody it's worthwhile to have a professional look at your systems and your situation and tell you what to do. Is that correct?
Oh, there's no doubt. Yep.
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 Okay.
And there's two different types of consultants, by the way, on this. There's what they call the pre-boom and the post-boom consultants. So pre is, before what you can do before you get hacked, and then the other guys are after the hack. Totally two different areas of expertise.
Well, keep in mind, though, that if you have a cyber policy, the post-incident
Is covered.
is covered.
Yeah.
But one caveat to this whole discussion about cyber insurance, and this is becoming more and more pressing, and that is we're kind of blending in a couple topics here.
Yep. Yep.
It's very typical
I,
for us.
I speak of compliance, right? That's a very important aspect to it. But there's also a continuum of business practices that are necessary from a business operator, that you're doing your backup daily, if not weekly, that you have your multi-factor authentication consistently,
Yep.
that your passwords are encrypted. I mean, there's a number of really important steps. And so when you're obtaining cyber insurance today, unlike 7 or 8 years ago, you have a completed questionnaire that as a chief informational officer or as the CEO or the point of contact for an organization, if you've identified on that questionnaire that your business does the following listed things, right? To obtain a rate from an insurance company, and then an incident happens, and then during the forensic process of breaking down of how a claim took place, it turns out that 1, 2, 3 of those things in that questionnaire were never implemented.
Right.
You have become null and void of coverage.
Right.
Where the insurance carrier has the legal right to deny the claim because
You didn't do what you're supposed to do.
You stated this, but in reality, you had that. So,
right. You're kind of like having home
again,
insurance where you say you have a smoke detectors, but you don't have any smoke detectors, and then you have a fire. Well, insurance is not going to cover you.
yeah, and this was a business practice that started years ago with commercial insurance, that if you had a commercial building and you had it fully alarmed, right? And you identified that the building was alarmed, and then there was a theft of property or an intrusion of a building. And it turns out that the alarm might have been there physically, but never was active, never had a history of activation. You're holding the bag for a significant loss to property.
Wow.
Because the insurance company is going to deny your claim. So that practice started years ago. Now we're seeing it with cyber. And the other thing is, in the event of, and I use the term loosely, cyber, but we're also talking about ransomware. We're also talking about, the fact that you might have access to your system or limited access, but someone through the malware system has created some roadblocks where you don't have access to your banking account, for example. So your finances are frozen. So there's elements of your business where you can find that you're not fully operational. Those types of losses are broken down by the insurance provider. They will do a complete forensic reading, although it might take 3 to 6 months to determine the final analysis. But reading some of these forensic reports, I'm telling you, it's the who's who of cyber. Although the faces are constantly changing, those bad actors are global and they're changing hats all the time.
Hopefully it's because the beekeeper knocks him off.
Oh my God, don't even get me started. He's referring to the movie, guys, The Beekeeper. And Joe and I were in a presentation by the FBI when we were down at the camp event in Newport Beach a few weeks ago. And by the way, we're going to have the FBI on the show in October. I already have them scheduled. But there's this movie called The Beekeeper. And let me just say that this guy's methods for dealing with these horrible people, I don't know, it appealed to me on so many levels. So anyway, it is, yeah, that is not a movie for the faint of heart. It is very gory, but the bad guys really get it.
But real quick, I want to share with you. So Kivu is a consulting company. They're based in Emeryville, California. They do a lot of forensic breakdowns after an incident has taken place. But to read their report and their white paper, they can nail this down to the actual point of intrusion. And many times in a ransomware or a cyber incident, what has taken place actually happened months in the rearview mirror. It may have started 6 months, 9 months, 12 months ago, and it may have happened. And then again, innocuous, someone just clicked on something that they didn't intend to, and they didn't report it, and they move on. But there's your point of intrusion,
Right.
and it's really very, very interesting.
What's the name of the firm? Heboo?
Kivu, Kevu.
We've heard that, and we've heard up to 18 months. They'll just sit there watching your system to wait for the moment where they can get in there and do something. And so it is, you have to have systems in place. So we have a question from someone who's asking whether you have a checklist. Do you have a newsletter? Do you have some sort of reference point? Or is that, I mean, do you have that, Joe?
No, I don't. I
Okay.
don't.
So they would need to consult with someplace like Shauna's company.
Correct. Yeah.
All right. Yeah. And again, it sounds like this is not a do-it-yourself fix, guys. This is consult a professional, just like somebody needs us to do their loan. We need someone else to do this for us. We don't know how. And you cannot cheap on this. You cannot.
Yeah, we had it where we had our guest 2 weeks ago, and right as that show was airing, one of our coworkers got ransomware, or ransomware. So can happen anytime to anybody. It's not just the broker; it could be the loan officer.
Right. So the name of Shauna's company is Redbox, and she was on 2 weeks ago. I believe that episode is on our YouTube channel, YouTube Mortgage Pros 411 on YouTube. Go subscribe, pretty please. So yes, Shauna from, I think she was 2 weeks ago. I don't know. It all blurs.
Yeah, 2 weeks ago.
Yeah. So anyway, so Shauna Fippen, and it's not Shauna the way that you would normally think Shauna. It's Seana Fippen. And so again, Mortgage Pros 411 on YouTube. All right. So let's talk about cost. And I hate to do this on this show because I know there are 5 million variables, but I want to give people an idea of how this works. So you would explain to me that insurance companies look at you when they're trying to decide what your premium is going to be, and they figure out, are you doing things right or are you not doing things right? And that the cost varies greatly. So walk us through that, pretty please.
So, a real estate or a lending group, which I have a few here in the Bay Area, as an example, where they have 5 to 7 employees, 3 or 4 of them are handling the loan packaging, for example. They're doing all the right things. They've got all the systems in place, and they consistently do it every 30 days that they're going through and checking off. A multi-million-dollar cyber policy, affording them the protection that they need for their hardware, their reputation, cost of legal defense if they're sued by a client, and so on, is about a $4,000 cost. But there's also that same example. You take an individual who has 5 to 7 employees, rather small operation, but very efficient and effective at what they're doing. And they're not paying a lot of attention to these required conditions. They're going to pay $8 to $10 to possibly $12,000, and they're not going to find that they're being able to be renewed year over year because that acceptability for businesses that know that they need to do it but decline to engage in these necessary steps would make it more difficult year over year to obtain the insurance. But there's a big difference in expense.
Yes.
Right.
That's amazing. So again, it pays to get your house in order before you get the insurance policy, it sounds like.
Definitely.
Oh my gosh. Holy guacamole, kids. Okay, so this used to be something that felt like it was optional. And, again, I told Joe, I said, I can just hear people saying, I can't afford it. And I would say, go close one more loan a year and pay for it. That's it. It's that simple. Just go do it, because not doing it, I don't think we can
Well,
say
yeah, there's companies out there that, we used to know, then they're not there anymore because they got hacked and it killed them.
right. So back to, we discussed this the other last time. 60% of the companies that have a cybersecurity or ransomware incident don't survive. Joe, do
Mm-hmm.
you agree with that
Wait,
number?
what's the percent?
Yeah.
60?
60,
Yep.
60.
Wow.
That's huge.
It's
Yeah.
incredible.
Yeah.
And of the 40% that do survive, one would want to know, okay, what did it do to their business? Like, are they closing, do they have less business because their reputation was damaged? So,
Do you still have all your money with your credit union?
no. Okay, okay. So by the way, I hadn't heard from them in a while. So they were doing some okay, just to catch anyone up who wasn't here a few weeks ago. So I am a member of Patelco Credit Union who had a ransomware attack. Is that correct? I wasn't exactly sure because they weren't totally clear about what, maybe they were, but it all blurs together. So anyway, I had all of my, like checking, money market, that was all there, right? No, no other checking anywhere else. So they get hacked or ransomed on July 29th. I did not have access to my money for 2.5 weeks. 2.5 weeks. I didn't know if money was in there, not in there. I couldn't see it. They couldn't tell me what was there. I couldn't pay a bill. I couldn't do anything. So the other day I got an email, which I have not even read in its entirety because it was so stupid. And I was so frustrated with it. And basically, they're like, yeah, sorry.
Wow.
Sorry. Are you are you kidding me? Sorry. So anyway, it is very prevalent, and it was really interesting because that happened, the crowd strike happened, and then I never figured out whether the county recorder's office is going down that following Monday after crowd strike was related at all to crowd strike or if it was a separate incident. Does anyone know that? Anyway, I couldn't close a deal that day because the county recorder's offices were down. And I'm thinking, I keep going, do we need to go back to analog? And I can't get any of the tech people to like wrap their brain around that being a good idea. I don't know why. And yeah. And what's really funny is last night in like late, I got a text from my youngest child who is a senior at University of San Francisco, and he was invited to participate in Stanford's hackathon coming up. And I'm like, okay, when he was growing up, he was always very computer techie. And I kept waiting for the FBI to knock on my door telling me there was some shit going on that I wasn't aware of. But that didn't happen, thank God. And so I believe he is, using all of his computer knowledge and expertise for good at this point. But I'm like, my kid's going to a hackathon. Is that, is that, did you
Well,
freeze? Oh, there you are. No, good. You were so still. I thought you were frozen.
no, and something like that is where you have Homeland Security and CISA,
Yep.
um,
CISA.
which
Wait.
which is constantly 24/7. They are vigilant over North America, right?
Yeah.
Here locally, they're in the federal building in Oakland, so they have a local presence. But your son attending something like that, we actually have careers that are being developed
Yeah.
for those individuals
Yeah.
to assist in creating, the next generation of cyber defense from protecting businesses. It's amazing.
It is amazing. Yeah. It's funny though, because I had all sorts of things swirling in my head. I mean, my first, oh, I'm so proud of you. And then it went all the way to, oh God.
Yeah. Yeah.
Anyway, I keep telling him he's doing this AI internship and his focus is really on AI. And I keep telling him that we may very well run out of the resources to run all the AI and have all the components needed to generate the energy for all that. And the anyway, and so it's good to know he'll have something to fall back on. But
Well, but you bring up something really interesting, which is another kind of like poke to the bear, and that is the AI element that we're already dealing with now is a
Mm-hmm.
whole nother reason why cyber ransomware insurance is so very valuable to have. And I want to comment on an earlier topic or something that you brought up, Audrey. And I view cyber insurance along the lines of having auto insurance. The need is that great. The need is that great, similar to a trip and fall. If you own a commercial building and you've got business that's interacting, you need your protection for that building for that reason. You're driving a vehicle, you need that protection because circumstances happen. And I'm telling you, as prevalent as those requirements are in business, cyber is just another layer that is no longer, can you afford not to have it? It's, are you prepared to do the necessary steps to obtain an affordable policy and maintain it?
Yes.
So,
I was having a conversation about this with my best friend last night of 455,000 years. And they have a business. And she said, well, we have to have it. And I said, what do you mean you have to have it? Because there's no current requirement. And she goes, you can't afford not to. And I went, there it is. That's right. And the more that we can embrace that idea, and again, I don't like doing commercials for most people, but this is really not a commercial. This is just a conversation about how imperative it is that we employ these measures in our business and that we are really aware of this and that we're protecting ourselves and our clients and our reputation. So I want to take a few minutes just to talk about insurance in general, because God knows that is impacting all of us, whether it's home, car insurance, or cybersecurity insurance. And so you were the person who I had the opportunity to interview the state insurance commissioner for California, Ricardo Laura, a few weeks ago. And I found that whole experience really interesting because I went in feeling pretty jaded and pessimistic. And I'd like to hear what your takeaway was, because it ended up being different than I expected.
mine too. And I think
And just to recap, guys, Joe's in insurance. He is the insurance guy. So he's got his nose to the ground all the time. So he knows way more than I did. So that is encouraging. Yeah.
so for him to speak very open and candidly, to be at a point in time where he recognized it's time for us. We've got to correct. Although it took everything I had not to take any shots of how long it took him to get here,
Right.
but the fact is he
He's got
got
there.
to this place now where he is committed by the end of the year that the necessary requirements and the Office of Administrative Law will complete the documentation so the Department of Insurance can roll out to the industry providers the roadmap of what the expectations are. And to hear him explain that with the governor's signature and that state of emergency that was declared, it eliminated a legislative process that could have added 18 to 24 months to it.
Right.
So we've accelerated it very quickly. So very, very happy to hear about that. And also happy to know that the final hearing of rate making, including catastrophic modeling, which is one of the topics we talked about, is going to be September 17th.
Okay.
That'll be the final hearing. And then from that point, then the clock ticks through the end of the year for his department and for the Office of Administrative Law to come together to write the regulations necessary. So that's a positive step.
It is. I just want to say to anyone who's in another state or not doing business in California, California is the largest market in the country. It is the largest. It is number 3 or 4 in the world. And what starts here always
Goes around the
other
world.
states and other countries. And so if you feel like this doesn't impact you, it will eventually. So just listen up. So Joe, I literally told him, and you were there, that I thought that state of emergency was a bunch of baloney and that I didn't understand at all what it actually did, which was, to your point, it accelerated the timelines for getting something done. So let's go back to September 17th. They're going to finalize the new rates for the state. What is that?
Well, the final public hearing will occur. So he's met his requirements on the number of public hearings on the topic. It'll be the final one. Once that's completed, it'll be a 3-hour meeting. Then it's over. comment period's over,
Okay.
then it comes time to complete the regulatory and the writing of the regs is after that.
And when they put that state of emergency into effect, what it did is it gave them 1 year to get a certain number of things done, correct?
Well, it didn't necessarily put a timeline to it.
I thought it did.
It
You sure?
Yeah, I'm almost sure it didn't.
Hmm.
But what it did do is it got the attention of that particular state department, the Department of Insurance, because my understanding, and again, was that the governor had had enough.
Mm-hmm.
He'd had enough of the senators and the assembly members coming to him saying, when are we going to get relief? You know, the constituents are getting hammered on this.
Yes.
That was his final step. But it cleared the way for for this to be done.
What I was frustrated by is, you may remember when I said to him, and I said it more than once, and then he finally answered, how long is it going to take to fix this mess? And his answer was 3 years. 3 years.
Mm-hmm.
I'm like, there are people who aren't going to make it 3 years. I mean, they're just not. And so, and I was talking to a buddy in another state, and because I keep thinking there needs to be some solution at a national level, or some complete overhaul of the entire system, where maybe we have catastrophic events all in one, under one umbrella, and maybe at the federal level. And I don't know. I do not think that I have this figured out, because I do not. I'm just throwing ideas against the wall to see if anyone, could like take pieces of something and turn it into something good and useful. And there is a bill in Congress that was proposed, but it was proposed by one side, which will, of course, just because it was proposed by one side, will not get picked up on the other side unless somebody pushes them. And it does call for a catastrophic insurance policy that would combine things like, hurricanes and floods and wildfires, etc. But
they just forgot to put earthquakes in there. What's up
they
with
did
that?
not put earthquakes in it. And when I brought that up with Ricardo Laura, he literally shuddered and didn't want to talk about it, because
Oh,
it's too
he
much.
recognizes that the state is woefully exposed to very little earthquake protection from an insurance standpoint.
Yeah,
Right.
it is terrifying. So back to this national thing. The problem is, I mean, A, it's not going to pass, and B, once it does pass, or if it ever did pass, the implementation period was out like 5 years from the date that it passed. And I'm like, oh my God, people cannot last that long. They can't. So what are we going to do about that? And by the way, if you say, oh, well, then they just can't afford to own a house. Well, they also can't afford to rent, because the owner's policy at the rental has gone up, and it's just so connected, so connected. So there need to be some solutions. There needs to be a real rally of people coming together, and it needs to not be political, because it doesn't matter what side you're on, we're all being impacted by this. And the problem is, yes, you live in Diablo, California, and in a very expensive place, and your insurance got canceled. You're not going to like it, but you're probably going to keep your house and keep your, expensive insurance policy till this storm is over. Play on words. Get that? Anyway, so if you're on the lower end and you're on a limited income, that's not going to work for you. You're not going to make it. And then what are you going to do? Okay. So, Joe, any solutions
Yeah.
in the short term?
Well, in the short term, it is if I'm reading the tea leaves from the insurance carriers, they just want to know what the future is going to look like. They're prepared to engage to some degree for a number of reasons. Number one, you touched on it. California, fourth largest insurance market in the world.
Okay, just so you know, your background is blurred out, and when you hold your hand up, it looks like you're doing this.
Oh, fourth largest. I'm sorry about that. I was getting the way you speak, Audrey, got me so relaxed. I sat back in my chair. I just was taking it all in.
Uh-huh.
But what I want to say is there a solution? Oh, it's going to be blended. There's going to be a couple things the way I see this happening. But in the short term for California, it's a matter of these major multi-billion-dollar insurance organizations realizing they cannot continue to be on the sidelines in the fourth largest insurance market in the world. You've got to be engaging. The only way they grow is by writing insurance and collecting that premium. There's a way to offset the risk. And I think that this catastrophic rate modeling process, we're going to get there, whether it's in 2 years or 3 years, but to know that the future, that there is an insurance future in California. Having said that, I personally do not want to see government involved in insurance. FEMA is a great example of it. It's a very expensive process for the federal government to operate insurance, much more so than an insurance company actually handling insurance, actually handling the claims. So there's that balance. And I truly believe it will not take that 3-year window to get us to where we need to be.
Oh,
I can only hope one thing is that between now and the stabilization period, that the California Fair Plan, which is the carrier of last resort, does not suffer a significant fire loss where they go belly up and then the insurance industry has to fork over billions of dollars to offset those losses. We talked about that, in that gathering.
Yeah.
So again, not to bore the attendees, it can only get better, and I believe it will get better.
okay. So as far as somebody being bored by this conversation, it's impacting all of us every day in our businesses, our clients. I'm getting phone calls from people I haven't heard from in a long time because they paid off their houses and they're saying, my insurance just got canceled. I've been a perfect, consumer for 20 something years and now I have no insurance. What do I do? And so listen up, kids. This impacts you, your clients, your parents, your siblings. I mean, it's happening to everyone, and it is something that we all need to be aware of and paying attention to. And we have to be part of the solution. Otherwise, you're part of the problem.
Yeah. And a part of that solution, I might add, not too far afield, but it is insurance related. Since post-COVID, the number of nuclear or high value lawsuits being filed is at a breakneck level in California.
Hey, say that again. For what?
For personal injury claims.
Yeah. Okay.
Okay. And so now we're also dealing with not only wildfire as an expense that's been incurred, but insurance providers that are having to protect you and I against individuals that could very well have been hurt in a car accident, for example, who now feel that their injuries are a six-figure amount of compensation because they hired an attorney.
Yes.
And so
the attorney has to get paid. Come on.
Okay, shut up, Kevin.
I know, but this is now becoming a social problem.
Oh, it's huge.
Right?
Probably the problem. It is the problem.
Yeah, and this is on the heels of another social problem, but it is insurance related, and we can all attest to this as we drive around wherever we're at. But it doesn't matter what age level you're at. Distracted driving, again, is one of those other prevalent issues that is affecting insurance. It's affecting the cost of insuring and so on, the claims expenses.
So is distracted driving really causing more accidents?
Absolutely.
Are you kidding?
Statistically, yes. And the accidents occurring are of a higher value. So the magnitude, what they call severity of a claim, has increased substantially. So and imagine that, because that second or 1.2, 1.8 seconds of being distracted is enough where you're, instead of hitting someone, rear-ending someone in an accident, instead of at 20 miles an hour, your impact now is at 45, 48, 50 miles an hour. And you've had no chance to protect yourself, right? And respond accordingly. So,
I did a little survey. I was driving back from, I think it was Yosemite on the way back, and I happened to be in the passenger lane of a very high-profile vehicle, so we were riding really high. And I was able to look into all the cars as I drove by, and the percentage of people whose phone was in their hands as they were driving was probably close to 80%.
Yeah. You see people driving in the fast lane looking down at their phones. It's so infuriating. And by the way, they're driving too slow and need to get the hell out of my way. It drives me crazy. So, yeah, it's a humongous problem. And just because I know people are dying to know what the update is on this, Joe, I was telling people a few weeks ago, I have a bumper that needed to be repainted. So I go to get quotes on this thing, and and they're crazy to repaint a bumper between $1,500 and $2,600, right? And I'm thinking, are you kidding me? I'll sand that thing myself. I mean, why is it so expensive? Anyway, I offered to help one guy. I'm serious. So, two of them in the course of this little uh, thing were, they told me, they're like, this bumper's been painted before. I'm like, wait a minute. So, I went back to the seller of said vehicle and I said, hey, this is what I'm being told. I went through this whole process. Guess where my car is right now? It's being painted by that person or that place for free. So anyway, that's the resolution to my situation. Because, and but what it made me think of is, this is why our insurance is so expensive. And motor vehicle insurance and shelter have been the two components within the inflation numbers that we have been seeing that have kept those numbers much higher than they would be without those costs being so elevated. Mm-hmm. And so motor vehicle insurance is crazy, crazy, and the claims are a problem. And then you remember when we had that panel of insurance providers, you being one of them in Newport Beach. I mean, water claims. So people who have, like a leaky pipe under their sink, and then they don't address it because they don't have the money to fix it, and it just sits, and then all of a sudden it's moldy, and then all of a sudden the mold spreads, and then boom, you've got a big huge claim for mold, and you need $100,000 kitchen instead of to have the plumber come and spend $300 and fix your pipe. So water claims are a big, big, big problem that I was not even aware of. Yeah. And so anyway.
And on that point though, it is so widespread that I really predict in the next 3 to 5 years that from an insurability standpoint, you are going to be required to have a leak detection system on your main water line that services a residence.
Interesting. What a great some insurance companies that have that already. I thought it was a brilliant idea.
That's a brilliant idea. How much are those?
Well, unfortunately, it's a $600 to $700, maybe $800 expense to have a plumber come out and do the install.
Okay.
But I think that the
insurance company would give us a discount if we had that.
They do.
Yeah, but it's a marginal. It's ridiculously low from a percentage standpoint. Typically, these kinds of discounts can be an offset of significance, but right now it's not. So this is something in play. And then the final thing I want to comment on is the auto insurance. And again, whether it's in Nevada, Arizona, Idaho, Oregon, Washington, all Western states, we're talking about 28 to 35% increases on your auto rates that started kicking in March and will continue to roll out into the market.
Yeah.
That's significant.
Yep. It's huge.
So
huge.
And why is that? Because of all the new equipment on the cars? Yes. Or
well, that's because for a number of years, the increases have been very marginal and have not kept up with the actual inflationary adjustments for labor and parts. And now we're playing catch up. And yes, the cost of repairing a vehicle today versus 5 years ago is significantly higher.
Yeah, you just touch your bumper on something, and now the alignment's out, and you're
so dumb. Oh my God,
it's all out of whack, and
yeah, it's terrible. And then you have you have to have all these. So now there's this proposal by someone who shall go nameless, but they are not invited to Thanksgiving. I'm going to tell you that for sure. They want to put some sort of device on the car that makes it so you cannot go more than 10 miles over the speed limit. And I'm like, okay, that's good. How much does that cost? How much does that cost? And then how much does it cost to maintain? So every time you have a sensor on your bumper or you have this, that's why my bumper costs so freaking much. It's because there are sensors that if you take the bumper off, you got to put it all back together, right? And so I love those sensors, but there's a cost associated with everything. And there's got to be some sort of idea of what kind of ROI we're looking at. And okay, so I just want to take 1 second. If do you know of any programs that are available that can help homeowners pay to, help bear the expense of making their homes fire ready or waterproof? Are there any programs out there like subsidies or, anything?
That's a great question because more traction is being aligned to doing that hardscaping effort. And the answer is no, unfortunately.
Okay.
Now, if you have if you're the state of California and it's a state property, they're going through that process now. If you're in the city of Orinda, for example, where you're a Firewise community, they may have local funds in a Firewise community, but in the Bay Area, that's the only community I know that is a quote unquote Firewise participant. But unfortunately not. But again, going forward in 3 to 5 years, that's going to be one of those insurable questions. What have you done to eliminate fuels around the perimeter of your home?
Yeah.
So,
Oh God. Well, on that bright note, uh, here's the deal. We are doing better with rates. There are a zillion loan programs available to help a lot of people. The clients who used to have to just throw in the garbage because there was nothing to help them, there are places that you can send those loans now and close them. So spend this time, take this information, internalize it, figure out how you can use it for yourself and pass it along to your borrowers, and go get some loans and close them. And then you can afford to pay for your cyber policy. There you go. All right. Joe, thank you so very much
thank
for being
you.
here today.
Thank
It
you.
was great. We really always appreciate your invaluable information. Thanks to everyone for being here. And we'll see you next Tuesday or on YouTube. Bye, guys.
Bye.